Good to see you guys here on Saturday afternoon. I think this session, I personally is very looking forward to it because for me, this is my 25th year in the financial market. That means I went through three bear market. This is my third bull market. So then we have Peter, who is also, I believe, is 20 plus years. So altogether, we're about 50 years, half a century. Also, I think, especially, I'm actually looking very forward to the panel discussion. Also, because the last quarter of 2024 is just started going, and we are going to 2025. For me, 2025, before I carry on, how do you all think about 2025? Let's do a survey. Do you think it will be good for the stock market? Those who say yes? So few. Okay. So those who feel that it's not going to be good for the bad market, that means probably you're going to have a bad market. You see my hand? I'm not too optimistic about next year, but later on, probably during the panel discussion, we can discuss more. All right? So good. Okay, whatever I share this afternoon, I have to do this very fast because I have 100 slides to put out for 1 hour. All right, so, but my take is please take your pen and paper, copy whatever I think, whatever me and Peter are going to share this afternoon is going to be very important. All right? So whatever I shared for me is I do not have a financial license. Whatever I share is just my personal opinion. All right? My personal view. All right, so please take it with a pinch of salt. You listen already, you go and do your own research, then make your own trading or investment decision. Is it all right? Am I going too fast? Can I go faster? You shut it down. Okay. Okay, Tony. So I think the biggest thing is what happened on the 18th of September. This fella cut 50 basis points, right? I think the whole market probably expected 25, but he went a bit more. He went 50. So that's why Donald Trump say he is either trying to support Democratic or maybe US economy is in a recession, correct? But to me, none of the above. I don't think so. All right. So now let's go through what has went through for the Fed. This is from 1955 until right now. This Fed rate since 1955 until right now. So ladies and gentlemen over here, this is one of the most aggressive Fed rate hike in the history, apart from the 1970s and 80s. Can you say this is the most aggressive? From March 2022 until July 2023, 11 times. From -0, it went up to 5.25 to 5.5, correct? Then it stagnant until finally on the 18th of September, this fella, he cut 50 basis points. So right now, it's about 4.75 to 5, right? Correct not? So, ladies and gentlemen, so do you think it will go to zero? Do you think so? If that happens, maybe that means US really got a big problem, correct? If not, I don't think you'll do it. So now, let's go through the past 10 rate cut cycle. I mean, the previous rate cut cycle, 10 of them. Let's go through each of them. All right? There are 3 types of rate cut, 3 types. One is what we call normalization. The other type is what we call panic. Third type is what we call recession cut. All right, so let's go through the 10 of them. Like 1984, it was normalization. 1987, all right, it was the so-called the Black Monday. By Dow Jones crashed by 23% on the 19th of October 1987. So as we go through, of course, the latest one was the COVID. All right, that was the panic cut. All right, so let's look over here. Before I go into here, let's look at the S&P 500 performance after the rate cut, 1 month, 3 months, 6 months, and 12 months later. All right, so if we look at the panic cut, which is the COVID and the crash of 87, and the 1998, the LKCM, long-term capital management crisis. All right, if we look here, After the cut, generally 3, 6, 12 months later will be positive. Can you see that?
This time around, if you ask me, I think it's more of a normalization cut. Why? Because it was too restrictive already. Because when you come over to here, I don't know whether you all can see or not. Can you all see there's a gray column over here? Yes or no? Those are the period of recessions. Also, can you see Fed increased the interest rate until almost 6 plus, then it caused the recession. There was a recession later on. Then this was a 2008 global financial crisis, there was a recession. So when Fed increased until this region, it's very restrictive already. You understand? Or that's why they pause for so long until they start to see the CPI number coming down. All right? And they start to see the unemployment rate start to go up, right? But last night, unemployment rate was, we have a strong US number, correct or not? Correct? It ticked down from 4.2 to 4.1. Correct? So that's why US market, last night, chiong, right? But the thing is, ladies and gentlemen, if today or tomorrow, Iran fire more missile, or Israel going to attack the oil, in Iran, then what happened? Also, my take is this Middle East war is not going to end soon. Let's pray. Let's pray this weekend nothing happen. But you never know, right? Correct or not? Also, ladies and gentlemen, so if you ask me, I think this time around is more of a normalization cut rather than a panic cut or a recession cut. If we look at recession cut, like what happened in the 1990s or 2001, this dot-com bubble, 2007, this was the so-called global financial crisis. When we have a recession cut, can you see be it 1 month, 3 months, 6 months, 12 months, is all negative. All right? So, but when we look at normalization cut, this is the return. Also, what I'm trying to, if history were to repeat itself, I want to say again, if history were to repeat itself, we should not be too negative this year. All right? I believe we should be in the last leg of the bull run. We should be seeing a top next year. Maybe Peter has a different view, I don't know, but we can discuss later. But I do think that if you ask me, I think it's about time to have a top and we go into the bear market again. To me, 2025 to 2027 is not going to be pretty because I think we will have World War III. It's okay. We see. All right? But it's good. If it really happen, then I have something to tell my next generation. I went through a World War before. All right? Just like how my parents tell me they went through a Second World War before. All right? We will see. All right? We can discuss more during the panel discussion. All right? So this time around, I think it's over here. This is what we are having, normalization. So don't be too pessimistic yet. Let's enjoy this party first, can? Let's start to worry next year. All right? So now, we have just, in the US market, we have the best year in September since 1997. The best year. Normally, September is weak, historically. But last month, now it's October, 5th October. Last month was exceptionally good, or the best start of the year since 1997. All right? But when we have such a good start, when S&P went up more than 20%, normally October, if you look through history, these are all the years whereby S&P actually went up more than 20% in September. But when it comes to October, not too good. All right? But the thing is, ladies and gentlemen, even though this may be a potential worry, like this time around, it could be the war, right? The firing of missiles between Iran and Israel, right? Correct? And I don't think it's going to end anytime soon. All right? So, especially this year, what's going to happen in US on the 5th of November? Don't know. Election, right? Or initially it's Trump against Biden, right? But Biden don't know, Si don't know go until where, right? So Kamala took over, correct? So let's do a survey. How many of you think that Trump will win? Can you put out your hand? Trump will win. So few. How many do you think that Kamala will win? Then the rest, Leo will win. Oh, Leo, your supporter. All right. So if you ask me, I think Trump will win. All right. Win is one thing. Can take office or not is another thing. You understand what I'm trying to say? All right. So we can discuss more later on. But October tend to be weak in election years. So this year is actually election year, so it tend to be weak. All right. So, but the thing I just want to say, normally last quarter of each year is positive, is bullish. All right, these are data from 1950 until 2023. All right, for the last probably 73 years. All right, normally last quarter, we are doing last quarter, right? October, November, December. But unfortunately, because this is an election year, so probably we have a bit of weak October. But if you ask me, I'm bullish about November and December. All right? So that's what we look at historical data. Wow. So from now, I'm going to share you guys where I think from now until the top in the US stock market, all right, next year, what are the so-called trends or the investment we can look at. Or this is what I coin, how I coin it is called ACS. I don't know why it appears here, but anyway, ACS. Each of them stands for one asset classes, all right? So A stands for AI. All right, ladies and gentlemen, I don't know about you guys, but I'm very, very excited about AI. I even have my personal AI portfolio. You all want to know what is it? No, no very good response, then it's okay. All right. So anyway, I have my own AI portfolio. All right. So, but I think I shared during June, during the talk with AmBank in June. But I want to share it with those who didn't attend in June again. Why am I so excited about AI? In case you all still don't know what is AI, also AI, ladies and gentlemen, is growing at 24% CAGR. 24%. The whole AI was valued at 136 billion at the end of 2023. It's projected to grow at 35% in 2024, another 32% in 2025, and eventually reaching 827 billion by 2030. Or that means in another 5 years, it will be 827 billion, ladies and gentlemen. Okay? This is not what I say. This is the so-called expert say. McKinsey and company predict the AI could add equivalent of 2.6 trillion to 4.4 trillion annually to the global GDP. That means every year they're going to add 2.6 to 4.4 trillion. Ladies and gentlemen, in case you don't know how big is this, the so-called UK entire GDP in 2024 is actually 3.5 trillion. Yearly, ladies and gentlemen. All right, in case you say, this one sorry, then I show you. PricewaterhouseCoopers says the global GDP by 2030 could be 14% higher than today because of AI. This is the equivalent of the additional 15.7 trillion. In case you don't know, trillion, how many zero are? How many zero? 9. 9 is billion. 12 zero. So you don't know how you take a piece of paper, you draw 12 zero, you see how long. Then in front put 15.7 and it's US dollar. In ringgit, I don't know how much. All right, ringgit times 4.2. All right, so ladies and gentlemen, this is the biggest commercial opportunity in today's economy, whether you like it or not. Whether you and me like it or not, it's coming, it's here. So my take is embrace it. All right, AI is a once-in-a-generation megatrend. All right, and for me, if you want to know my AI portfolio, Magnificent 7. All of them are in my AI portfolio. I shared this during my June talk. And in case you still don't know what is Magnificent 7, these are the 7 US stocks. I will go through each of them very briefly today because I only got about an hour. All right, I have all this. all of them in my portfolio is green already. All right? So, ladies and gentlemen, so for Magnificent 7 is this green line. This blue line is actually S&P 500 minus Magnificent 7. Can you see the profit margin of Magnificent 7 is so much higher than that of the X minus of S&P minus the Magnificent 7? Right? If you ask me, Magnificent 7, I cannot say it's going to watch on like what, but they are slow and steady. They are benefit of the AI industry. All right, so let's go through each of them individually. Of course, the first one is what we call the Apple. All right. Of course, the latest is iPhone 16. Any of you guys got your iPhone 16 already? Anyone? Don't have ah? Not in Malaysia yet, man? Oh, waiting list ah? Oh, okay. Okay. Even buy already the Apple Intelligence is only ready this month. Correct? But get prepared, get prepared. All right? Also, ladies and gentlemen, this is something about Apple. Look at the stock CAGR is about 31%. The gross margin is 46%. LTM means for last 12 months. Can you see 46% is very high? Does Apple manufacture its own iPhone? No, right? They just come out with design, right? Manufacturer is Hon Hai, Foxconn, correct or not? All right. So I think Apple is a very impressive so-called company. All right, it has the pro and con. It has a very high brand value, very sticky product ecosystem. Do you agree? Once you use Apple iPhone, difficult for you to get out. You ever want to change before from iPhone to something else? But they tell me, wow, very difficult. Okay, stay with iPhone. Oh, it's very sticky. And once you stick with iPhone, you start to stick to other things, right? iMac, blah, 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 all this thing already. All right, so ladies and gentlemen, look at the quality. Management is 5%. All right, all this key metrics. Revenue, probably because of this new iPhone together with the Apple Intelligence, this will pick up. But the service revenue and the return on capital, can you see, especially return on capital is 60%. This is very high. All right, so this is a chart of Apple. Ladies and gentlemen, historical high is here. Is nearing already. Among the so-called Mac 7, one of them break historical. Anyone know which one is it? Someone call. Hello, Powell call already. Hello, Powell. Okay. So anyway, one of them broke historical high, right? Which one is it? Start with M1. No, not NVIDIA. Start with M. Do you all use Facebook? Facebook belong to who? Meta. Meta broke historical high. Later I'll show you guys. All right? So Apple haven't broke historical high yet, but it's there already. Can you see it's near already? To me, it's just a matter of time it's going to break higher. Why? Probably because of iPhone 16 and its series of products. All right? So this Apple. Next, let's talk a bit about Microsoft. Microsoft gross margin is 70%. This is their so-called cloud service, positive 29%. Office product, that means all the Microsoft Office products, plus 12%. Personal computing is 14%. This is also a very good company, all right? Microsoft, all right? Let's look at the chart. Historical high is here. Or it seems to be bouncing off its 200-day moving average. Also, later on, when this bull market resumes, all right, we probably should be seeing so-called Microsoft break this high and go even higher. All right? So let's do a comparison between Microsoft and Apple. This is a stock price. Black color is actually Apple. Microsoft is actually blue color. Look at the return on capital. If you still cannot decide between Apple and Microsoft, which one? Return on capital, no? Black is the Apple. Blue is so-called Microsoft. All right, you all make your own judgment. I just want to say this again. I cannot tell you what to buy, what to sell, when to do it, because I do not have a license to do so. But I can present you guys with all the data, and you guys make a so-called calculated decision on yourself. Is that all right? Can I? All right, so this is a comparison. So if you really point a gun to my head, say, which one? I both also have. But if you really want to choose one, I choose this one. If you ask me, huh? So then the third company in Magnificent Seven is actually called Google. All right? So this so-called some key metrics about Google or Alphabet. All right? Look at the crowd growth is 29%. YouTube ad revenue is 13%. Search revenue is 14%. Do you know TikTok? They are trying to ban TikTok in US, right? You all don't know. Yeah, they are trying to ban TikTok in US. So what does YouTube come out with? YouTube come out with something called YouTube Shorts. SHORTS. Because they say, hey, TikTok going to ban, right? I come up with something. Can you see that? Also, they have very short duration YouTube videos to fight against TikTok, all right? So the Google, the CAGR is 22%, the gross margin is 58%. No. Well, to me, all this is quite scary, right? All right, so let's look at Alphabet, the stock chart. Historical high is here, about 190 plus US dollar. Ladies and gentlemen, don't worry. In US, you can buy one share. Or don't need what, 100, 1,000. No, you can buy one share. All right? So this is a historical high. Can you see there's a resistance over here? My take is once Google can take out this resistance, it probably is going to rally to test this 190 high. Also, there's a strong resistance over here. All right? So this is Google. Then you say, I cannot decide between Microsoft and Alphabet or Google. Then how? So this is a snapshot. All right, in terms of margin, you can compare orange for Google, Microsoft is a blue. All right. In terms of balance sheet, Google has more cash, 100 billion, than Microsoft, 75 billion. In terms of balance sheet, this is the so-called stock performance for the last 5 years. But if you look at it, the revenue growth, regardless Microsoft or Alphabet, both of them are increasing, correct? Also, Magnificent Seven, I would say, I cannot say all, most of them are actually quite good company, except for one. Which I think something is going to be exciting, going to be announced by this company on the 10th of October. Do you all know which company is that? Don't know, later I'll share you guys. All right, so this is Microsoft versus Alphabet, so you all can do a comparison. So next is Amazon. Amazon, so-called AWS, Amazon Web Service, the cloud revenue increased by 19%. Return of ROE is 20%. 20% is actually quite high, correct or not? Do you all agree? This is Amazon, ladies and gentlemen. All right, and the revenue you can see is keep on increasing each year as well. All right, let's look at the chart of Amazon. Historical high is over here, or Amazon is near to a historical high, or it probably is finding support at the 200-day moving average. All right, so once it take out this about $200 all-time high resistance, we should be seeing Amazon going even higher from here. If we take out this all-time high resistance over here, all right? Now, of course, a lot of people, when you talk about AI, they surely talk about NVIDIA, correct? NVIDIA is a darling of the AI industry. You just look at the key metric. The data center revenue goes up by 154%. The gaming revenue, 16%, return on capital is 109%. All right? But one thing I have to say, I don't think NVIDIA can keep on maintaining this kind of high growth. But it doesn't mean it will straight away crash. Probably its growth will slow down. You understand what I'm saying? to me, the biggest gain in NVIDIA, the fastest growth probably is over already. But it's not going to crash. It's going to continue steadily up. You understand what I'm saying? Actually, do you all know what does NVIDIA does? GPU, right? But they also got data centers, all these things. All right? So let's look at NVIDIA chart. Its historical high is here. So it has not broken the historical high yet. All right? But now approaching this resistance line, once they take out this and take out this about 140 resistance high, then it's going to go even higher. Or don't ask me when, but to me, I think this is just a matter of time when this resistance will be taken out. All right? And that's why. Yeah. Okay. So anyway, their latest is what we call the black well. It's in full production. Demand is insane by Jensen Huang. And their latest black well is going to be so-called launch in this quarter. So I think with this black well is going to so-called boost up their revenue. All right. Do you all know they have this GPU called H100? Do you know how much does it cost each one of the each H100? Anyone? It's about 30,000 US dollar. 30,000, no. All right. Facebook say they're going to have tens and thousands of NVIDIA H100 to run their AI models. All right. So that's why NVIDIA, if you ask me, is a darling of AI, definitely. But to expect it to keep on growing at such a fast pace, I think we need to be conservative a bit. But going forward, I think it's going to grow steadily. You understand? Steadily, but not this kind of explosive growth. All right? That's why there's a saying. This is a US economy. Tahan by two pillars. One is called NVIDIA. The other one is Taylor Swift. Those who don't smile, laugh on means you don't get it, right? Don't get it? Oh, never mind. Later you ask Leo. All right? But NVIDIA, it seems to be supporting the whole year. Everything is about NVIDIA, correct? Also, that's a joke about this picture. Okay, this is the stock I'm talking about that's broken historical high. Meta, I think we all know, they owns Facebook, Instagram, WhatsApp, Messenger. All right? Its active user went up 6.5% after so many years, no? All right? ROC is 31%. Very impressive. All right? The gross margin is 82%, no? All right? And this is a chart of Meta. Historical high was here. It has broken above. Can you see that? Broken. No, I show you all. Let's go through again. Clicker not working. Apple haven't break historical high. Going to Microsoft haven't break historical high. Google still far away from historical high. Amazon still a bit away from historical high. NVIDIA coming close to historical high, but Meta broken historical high and go even higher. Last night went up by 2.26%. Also, ladies and gentlemen, actually among the Magnificent Seven, it seems that at this point of the time, Meta is the biggest beneficiary of the AI, the investment in AI. So that's why it pushed it to go beyond historical high and go even higher. All right, so if you ask me, those who know about technical analysis, let's look at the chart of MEDA. This seems like to me a so-called ascending triangle. Also, if I were to do a projection technically, so we do a projection, that means 540 minus about 420, the difference is about 120. 120 plus 540 is about 660, technically. Potentially, it can go up to 660. Technically, if the bull market continue to run forcefully, all right, we should be looking at potentially 660. Okay? This in terms of technical analysis. All right? Also, I would say MEDA is very powerful. Or at least from the chart, it seems that is leading the pack for the Magnificent Seven in terms of AI play. All right? Then Tesla. Recently, it announced its delivery actually not so good, right? But on the 10th of October, they're going to have an event called the Robo-Taxi event. I think the whole world is eyeing this event. All right? So let's look at the chart of Tesla. Can you see Tesla still far away from the historical high? It has went up about 30+% recently, but it came down. Why? Because of the not so satisfactory delivery. But on the 10th of October, they are going to have they call this robot. This is actually a robo-taxi event. Probably Elon Musk is going to announce probably a full self-driving, probably the Tesla without any steering wheel. Or they are going to make it into so-called a Grab kind of service for their so-called robo-taxi. So that's why the whole world is very excited about it. So that's why the share price actually went up 30+%. If you can take out this resistance over here, I think it's going to challenge its 425 historical high. So among the 7 of them, the Magnificent 7, actually Tesla price action is the worst. All right? But even though it's the worst, if this thing, the 10th of October event, really Elon Musk can come up with something spectacular, I think, to me, Tesla is a black horse. Black horse that probably is going to do a catch-up. All right, and if that's happened, if you can take out this historical high of around 420, I think it's probably going to go higher from here. All right? So if you ask me, the best among the 7, which one of it? Which one do you think it is? Huh? Bread Talk? Or MEDA? How can I heard Bread Talk? MEDA, right? Or he has been leading the pack and go even higher from here. All right, almost close to 600 already, you know. Don't worry, can buy one share. All right, don't think, 600 USD, can buy one share. All right? And do you all know if you want to participate on this Magnificent 7, you all know where to participate? AmBank investment lah. If not, where? Correct or not? Have to go AmBank. Let the clicker. Okay, then you say, wow, so many stocks, 7 of them. No money to buy so many. Then I tell you there's an ETF. When you buy this ETF, one shot you buy Apple, Microsoft, Google, Amazon, Nvidia, MEDA, Tesla for you. Just one ETF. It's called Round Hill Magnificent 7 ETF. The symbol is actually MAGS. Let's look at the chart of MAGS. Historical high is here. It's coming close to a historical high. Once it take out its historical high of $50, I think MAGS probably is going to go higher from here. Also, if you don't want to buy the 7 of them, or you can you don't buy any of the 7, you can buy this one shot, you own the 7 of them, right? Easier to track also lah. But I can tell you, for me, my own AI portfolio, I own all 7 of them. For me, all right? Okay, I talked about the Magnificent 7, right? So then some of you guys will say, hey, Magnificent 7, do you have the next Magnificent 7? Have. You all want to see? Not interested, then skip this. Okay. Okay, like what I mentioned earlier, I think Magnificent is still going to grow, all right, steadily. But to have a very strong growth, I think not likely. Very strong growth probably will happen to the next Magnificent 7. Or take down, the first one is actually what I call, you all know this company? The symbol is actually PLTR, Palantir. It used to be very secretive because it has a lot of government projects. But now it starts to turn into commercial, more and more commercial contracts already. Also, ladies and gentlemen, look at the gross margin, 81%. Scary, right? All right. In case for those of you who don't know what is Palantir, very short introduction. All right. The whole idea behind PLTR was to develop software that will allow government intelligence agency to mine data in unintrusive way to prevent another 911. It was set up because of 911 in 2001. It deals a lot with the US government authorities. Today, PLTR has grown into a $52 billion company, thanks in large to its lucrative contract with a magnitude of US government agencies. No fewer than 30 agencies, US agencies, have entrusted PLTR with $1 billion in contracts, including a massive $250 million from Pentagon. All right? You all can read this, but this is what I want to share with you guys. The company is trusted so much by the US government that it is one of the 3 companies in the whole world that has a secret security clearance from the US Defense Department. 1 out of 3. All right? And these are all his customers. All right? Yes, I had PLTR in my portfolio. For me, it's up. Just now I see I'm up by 77%. All right? Let's look at the chart of PLTR. Anyway, PLTR, in case you don't know, it has an overlooked X factor. What's the X factor? It has been awarded or filed for 1,500 patents globally. Majority of these patents are designed to preserve the company's close AI advantage. You all heard of OpenAI, right? Have you heard of OpenAI? ChatGPT, right? That's OpenAI. OpenAI means anyone can go in and tweak the data. Anyone can read your computer code and they can reverse engineer your biggest breakthrough in a matter of hours. All right? But PLTR, the most of their patent is for close AI. That is their X factor. So PLTR actually has a 20-year head start and already locked in $1 billion in contracts with 30 of the largest US government agencies. And the thing is, it has recently been included in S&P 500, early September. All right, because fundamentally, it has been doing very well. And this is the chart. Then some of you guys will say, come to the historical high already, it's so expensive, right? Correct. Interesting thing, ladies and gentlemen, is this. After 25 years in the stock market, I realized one thing. Whatever appears high will go even higher. Whatever low, it will keep on going lower. It's like that one. Don't ask me why. Because stock market obey the law of gravity. You know gravity? If no gravity, all of us will be floating already, right? That's why low stock price coming down. There must be a reason. But there must also be a reason why it's going up. To me, it's a matter of time. It's going to break the 45 and go even higher. Look at all the projects that they have. look at all this project that they have. And they start to step out of a government agency contract. They start to go commercial already. Wow, I think it's powerful. All right? Okay, so the next minister, I mentioned one because I'm running out of time. Correct? How much time do I have? 10 more hours. Okay. Okay. I only mentioned one, right? Still got 6, right? I no time, but later panel's discussion, correct? Don't get me, then it's okay. All right, so just now I talked about ACS, right? A stands for AI. Now I'm going to introduce something probably a bit foreign to you guys or volatile, but C stands for cryptocurrency, which I think is very interesting. You may not want to participate, but at least you know something about it. Because Ho is talking about Bitcoin, correct? Even Donald Trump start to go use Bitcoin to buy his first burger, right, in New York, correct? It's good to understand. All right? To me, I used to think very negatively about crypto, but my view has changed. To me, in terms of Bitcoin, I think it is a digital gold. But it is a very volatile digital gold. Because when it drops, it can drop 50, 60, 70%, correct? All right? So just go through with me so that you can understand. And now there are actually ETF that we can participate in cryptocurrency in the US stock market. Do you all know that? Not like last time, had to open cold wallet, then buy Bitcoin, this. No. Now, SEC in so-called US already so-called legalized and allow all this Bitcoin or ETF to be listed there. All right? I just want to share this with you guys. This black line here is actually Bitcoin. This orange line here is actually global liquidity. So ladies and gentlemen, now Federal Reserve cut rate. Not only Federal Reserve, the whole world is cutting rate, correct? So ladies and gentlemen, with cutting of so-called interest rate, what will happen to a liquidity? There will be a flood of liquidity into the financial market, correct? Agree or not? Logical, right? Unless suddenly Federal Reserve, no, we're going to hike rate again, correct? But you look at Bank of England, you look at all this Fed, they are always they are started to cut rate. That's why I can tell you the global liquidity is back. And I can tell you Bitcoin prices track global liquidity 83% of the time. You just look at how they track. 83%, do you agree is a very high correlation ratio? Yes or no? So then, for me, I do cycle analysis. I can tell you, in the market, there's actually a 65-year so-called global liquidity index. This orange line here, 65 years. This black line here is actually the liquidity index. Or to me, next few years, until 2026, we should be seeing global liquidity going into the financial market. And if that happens, that's why I'm optimistic about Bitcoin. All right, it probably is going to go higher with this so-called global liquidity. All right. This is a chart of Bitcoin. My take is, if you want to play safe, wait for it to break above this 73 or 74,000 historical high. I think it's going to go higher from here. All right. Then you say, Derick, then how to buy? Don't worry. There's 11 ETF listed on the 11th of January in the US stock market. 11 of them. You can choose any one you want. Don't need to buy the Bitcoin, save it inside your cold wallet. Don't need already. You just treat it like a stock like that. It's an ETF. Can? But I just want to say this. Bitcoin or cryptocurrency generally is very volatile. If you cannot accept volatility, then stay with Magnificent 7. Is it all right? Can Okay. So next, I got 5 minutes, right? Okay. Last, ACS. S stands for small cap. Small cap. Then what's the definition of small cap? Small cap means a company with a market cap of between 300 million and 2 billion. This is considered small cap in the US stock market. All right? So now, ladies and gentlemen, something happened very rare in the US stock market in July. In July, can you see? In July, Russell 2000, that represents small cap in US market, did something very rare where it had 4 consecutive 1% plus days. That means for 4 days, each day it went up more than 1%. This is very rare. This only happened 13 times in the history of Russell 2000. All right. Based on historical data, we look back and look at all this green dot over here. The previous so-called 13 time. 6 months later, Russell is 77% higher. 1 year later is 85% higher. All right, those periods show return of 13.7 and 25.37% increase respectively. All right, so that's why watch out for small cap. And we do a comparison. When Fed start to cut rate, this is small cap, mid cap, large cap. This data from 1954 until right now. So blue column stands for first 3 months, green column stands for 6 months, orange column stands for 12 months. Can you see, after Fed cut rate, small cap so-called return is better than that of mid cap and large cap. Can you see that? Also, that's why I say, watch out for small cap. I'm not saying large cap, mid cap, they are not going to do well. They are going to do well. It's just that small cap is going to outperform them. You understand? Because all these small cap company is going to benefit from the rate cut. All right? Can So then how to participate in small cap in the US stock market? Or there are ETF. Don't need to buy individual stock. Buy ETF easier, especially for those who are not familiar with US stock market. Go through ETF. One of it is what we call iShares Russell 2000 ETF, IWM. Another one will be Vanguard Small Cap ETF or VB. All right? So once you participate in this, you're actually participating in the small cap sector in the US stock market. All right? So this is a chart of IWM. Historical high is here. It still haven't broke historical high. Do you all know Dow Jones, NASDAQ, S&P 500, all broken historical high? Correct? IWM, Russell 2000 haven't. That's why I say this sector probably is going to catch up with Dow Jones, S&P, and NASDAQ. This one probably is so-called the dark horse, just like Tesla. All right? Last chart I want to show you guys before I end is this. All right? Some of you guys will say, probably some of you guys will say, oh, the bear market is coming. But earlier I say, not yet. Probably bear market will going to come in 2025, right? Why? Let me explain this chart. This is from 1999 until right now. Okay? Remember, bear market happened in year 2000, the dot-com bubble, the 2008 global financial crisis, and the 2022 bear market. 2020 so-called the COVID, to me it's not a bear market, it's a deep correction. Because bear market doesn't end after 40 trading days. Remember during COVID, meltdown, right? But 40 days later, wow, spring up, correct or not? That is not a bear market. Bear market means it come down, people, hey, think it's bottom, they go and buy. Then it go down further, then they, Then it go down further, they go and buy, they thought that's the bottom, then it go even further down. It need to disappoint people until the point of time everyone give up already, then the market bounce up, then that is the end of bear market. You understand what I say? So 2020 is not a bear market. But let's look through. The black line here is IWM, Russell 2000. The light blue line is actually NASDAQ. The pink color line is actually S&P 500. Orange line is Dow Jones. Can y'all see? Can y'all see? From the bear market over here in year 2000, it goes up, right? Can you see each of the Russell 2000, Dow Jones, S&P 500, NASDAQ, all has to break historical high before it go into a bear market. Can you see that? Look over here. Russell 2000. Have we broken historical high? No. But Dow Jones, S&P, NASDAQ, all broken historical high. Can you see that? That's why I say, if you are a diligent study of history, you know that all the indexes, Dow Jones, S&P, NASDAQ, small cap, they need to break historical high. Then we will see the top of the bull market. But yet, we are not seeing that in Russell 2000 yet. That's why once it take out this high, it go higher, then we start to get worried. Cannot? If not, let's enjoy this bull run first. Okay? Can? My time is up, right? Okay. So, still got others, but it's okay. Also, I just want to end with this. On the ACS that I mentioned earlier, AI, crypto, and small cap, this is a trend probably you can look at to ride on this last leg of the bull run. All right, probably October will be a bit weak, or October will be a bit weak, but I want to show this again before I end. The clicker need to... Go back. Can go back. This. Or be optimistic about the Q4. So after we have a weak October, I think we should have a strong November and December going to 2025. Then when is market going to top in 2025? Will you be interested? It's okay. Interested or not? Interested? Later got the panel discussion, ma? Correct or not? Also, you all can ask a question later on. Or if not, have you all learned something this afternoon? Yes or no? Yes, good. Then I'll pass the time over to the MC. I'll see you guys later on. All right? Thank you very much. Thank you.
Thank you so much, Mr. Derick Tan, for the valuable insights on the US market. We hope everyone gained some fresh perspectives. We will now take a short break for tea break, which are available at the foyer.